Hey, my name is Bob Lovinger. I'm the president and founder of Flexbuy. If you are new to Flexbuy, welcome. If you've been with Flexbuy, welcome back. And today I'm going to go over, how we see what's going on. Obviously, the world has changed in the last few months, and it's affected us. It's affected you. It's affected everyone. But how do we go forward as a business, and what are we seeing out there, and how do we address it? So this is a new economy for sure. Um, I think it's going to be with us a while, whether we have another spike. I think it's going to take a while for things to bounce back and for consumers to get their confidence back. So I thought this was a good time to meet and go over what's going on and see where we're going to go from here. Okay. So obviously COVID-19 has affected the economy and customer financing. And I think I think I'm seeing this clearly. I think customer financing is going to play a more important role going forward than ever before. So what do we see even prior to COVID-19? 80% of Americans workers were living paycheck to paycheck. 69% of American households had less than $1,000 in savings. Most Americans have little or no access to credit cards. 77% of consumers that made a major purchase seek financing, and 45% of those purchases say they wouldn't have done the purchase if not for the financing. And consumers with means really never wanted to use their savings, and prefer to use existing credit resources. So what you had is, even before all this came about, you had the people that needed financing to become consumers, and then you had the people who preferred the financing, to be a consumer. So what's happened since? We've had this pandemic. A lot of people have been affected. We got some relatively good unemployment news today. I think the unemployment rate ticked down to about 13% or so, but it's still a very high number. You have a lot of people that have been brought back to their jobs part-time, maybe with less income. Um, and overall consumer confidence is at an all-time low. So, the people that were in this category before, that either needed it or wanted it, or even more so embedded it in it right now. Okay. Sorry guys, it's a little distracting. I'm trying to get people into the meeting as I'm trying to do the meeting at the same time. Um, So what's happened? And we're seeing it here as well. Lenders and credit card issuers are trying to mitigate their risks as the economy has changed. We've seen it even on our end as far as our lenders are concerned. We're not getting the same results, getting a lot more declines and a lot more of people that are approved that can't fund because maybe they put on their application that they have a job, and only to find that that job, they were furloughed or laid off. So it's becoming challenging, and lenders are definitely pulling back. And what I've noticed also in going through our most recent applications is, I think lenders are starting to redline as well, from the standpoint of what communities and what areas of the country have been most impacted by COVID-19. So a lot of the applications that we're seeing from the cities, from Atlanta, from LA, New York, I think the lenders are being a lot more cautious on those applicants, because they don't know, they're not fortune tellers. The underwriters are not fortune tellers. So the safest thing for them to do is to write tougher algorithms and just say, you know what, I'm going to wait on this. So, my hope is that as things stabilize and these better numbers come out, maybe the lenders will start opening up. But it's happening widespread. And from the standpoint of business, I don't know if we're ever going to see mainstream look the same as it did. I mean, mainstream was hurting even prior to this, and I think now, it may never look the same again. So what a credit issue is doing, and I want to give you this background before we get into what Flexbuy has and how we think we can help. So banks as I mentioned, banks are tightening up their lending criteria. Credit card accounts typically have the highest losses. We saw that back in 2008, and the knee-jerk reaction was for the banks and the credit card companies to just pull back to mitigate their losses. But people, when they're in trouble, they tend to go to their credit cards and start using them more. So people applying for credit card now are more likely to be desperate, for cash. So the people applying for credit card are being scrutinized even more, and even the people that have existing credit cards are being scrutinized, as I'm going to show you in a second. So what a credit issue is doing, they're closing inactive accounts. So what happens when things get tough and people have an emergency? They're going to go to that credit card with an open balance, with a credit limit, and they're going to start using that. So credit card companies realize that, and they start closing those accounts. So inactive accounts are the biggest risk, and that's why the credit card companies are going to go in there and they're going to be aggressive about suspending those accounts before they get to the point where they're going to be used. And from the other end of it, once a card starts getting a delinquent, maybe in the past it'd be a 30-day window or even a 60-day window before the credit card company would act. Now, as soon as they sense any type of problem, they're going to close out that credit card. So these are tough times, and this is causing the insecurity among consumers. So here's been the data. This was reported by American Bankers Association of the credit cards that have been closed out. So as you can see, as this virus peaked out in April, all of a sudden the credit card company said, we're gonna start really closing out these accounts. We're not gonna wait. So what does this all mean, for higher ticket merchants? And that's the business we're in, right? So whether you're out there looking at furniture stores or you're out there looking at home improvement and anything in between, we're talking about those high tickets of $300-500 up to $50,000. So what's in store for those businesses? What do they have to do to survive? So they have to work harder and be more creative than ever as far as how they're going to construct a sale, right? And isn't that what customer financing is all about? Isn't that what credit cards are all about? I know a lot of you have probably come from the credit card world, and prior to credit cards, it was all about cash. It was all about layaway. It was about installments directly with the merchants. So credit cards came, and credit cards opened up where people can leverage their purchase over time. So customer financing is just the next level of that, right? It's for people that either don't have those kind of resources, don't want to use those kind of resources, but they're still leveraging their purchase. They're taking a large amount and they're spreading it out over a period of time. So they have to, um, customer financing is one way which they can be creative, and that's really where we focus most of our energy. But it's going to be needed. The businesses to survive are going to have to probably expand their marketing to reach a broader population, because they're drawing from a smaller pool of able consumers. So if you had if you're if you're drawing out to a population of $20,000 before to have to get the business that you need, you may have to spread out to $40,000 or $50,000 and try to find that same number, because now a lot of people just despite their wants and despite their needs, and despite your best efforts, just aren't able to be consumers. And if not literally, then perceptually. So they may think they're not able to be a consumer. Demonstrate a creativity in putting a transaction together. So this is with customer financing and any buy now, pay later, transaction. So, before, a lot of businesses that didn't participate in customer financing because in their mind they didn't need it. They were comfortable. They had, you know, the, their book of business, and maybe they've been around a while. So, now they're looking around and saying, I may have to get a little bit more creative in how I construct a sale. I may have to reach into those people that it's not obvious, where they don't have the credit card to throw it on, or they don't have the money in the bank. So it's going to be a little bit more dicey, and I think it's opening up more businesses to the concept of customer financing. They're going to utilize technology to allow people to get educated and negotiate from home. So whether you believe the COVID-19 wave is over or not, a lot of people, even if businesses are opening, there's a lot of people who are saying, I'm not ready to get out there and go into a business yet. So, a lot of savvy businesses have already adapted. They've taken tools like Zoom or even, FaceTime or whatever, and they've learned how to communicate better with their clients. They're using e-signatures. They're using online contracts. So, but they're going to have to start utilizing technology, and that's an advantage that businesses have now that they didn't have. This would have happened 10 years ago even. The broadband wasn't there to allow this kind of meeting that we're having right now. So there's a lot more tools available to businesses, and there's opportunity for businesses that are tech savvy to come out and stand out above the competition. There's also an opportunity out there for people to teach businesses how to utilize tools to stay afloat and even thrive. And the reason we're here: offer creative buy now, pay later strategies to drive prospects and close sales. So as I mentioned, that's our business. So our business is, we call it customer financing, but it's really all about buy now, pay later. So we're not looking just at financing per se. We have in-house payment plan solutions. Any tool that we can give a merchant, a business, to say, we're going to take this sale and we're going to chunk it down into a monthly payment. So, this is always an issue, and it's become less of an issue over time, but there was always a misconception that only large businesses and retail businesses that offer certain things can offer customer financing. So, when I first got into this industry, 10 years ago or so, the when I looked around and I saw, financing, it was in the medical space, because Care Credit was already there through Synchrony. You had, if you wanted to go out and buy furniture or mattress, the no credits, lease to own products were already around. But the average business, particularly the service business, but the average business didn't know that, their small business can qualify for customer financing. So most businesses still today aren't aware that they are eligible to offer prospective customers a buy now, pay later alternative. It's becoming less and less over time. They're getting educated. I think we're helping them. I mean, we're out there, online, and people are searching us. So obviously the word is getting out that these things are available to them, but there's still a large opportunity of businesses that just don't know that they can qualify for it. Many businesses underutilize customer financing because they fear or are frustrated by the one-off lender implementation, or maybe they think they got one lender and that's all they need. So, you have these businesses on both ends of the spectrum, right? So you have these, let's say, retail businesses that have a Snap or Progressive in place, and they think that's all they need. But maybe they don't realize that their better credit customers will want something better than what's what amounts to 100% or more interest rate, even though it's a lease, it's not technically interest rate. And on the other end of the spectrum, maybe a business takes on, um, you know, one lender, and the cutoff is 680 credit score, and they think, all right, I have it settled, not knowing that probably more than 50% of their prospects are not going to qualify for their one solution. So even among the businesses that utilize financing, there's very, very few that utilize it broadly enough to cover a large portion of their potential customer base. So many businesses fail at properly managing their customer financing. I'm going to talk about more about that, in a little bit. So once you have customer financing, it's not just about having it; it's about how you use it. When do you use it in your sales cycle? And that's very, very important. That's probably the most important. Most customer financing companies and lenders only seek large merchants in specific verticals. So this is still true, right? So we have competition. Flexbuy is not the only game in town. Obviously, there's a lot of lenders out there. There's a lot of facilitators out there, but everybody's headhunting. Everybody's looking for the elephant, looking for the very big players. And there's not a lot of us really willing to go into the trenches and work with those small businesses, even those, home-based businesses, right? So even that's a newer thing now. I mean, it's been around for a while, but in today's time, that's even more prevalent than ever. So even businesses that maybe had a small office, it's an expense, and they're saying, screw it, I don't need a small office because I'm going to use the technology and I'm going to, bring it home. And those businesses want financing too. And as I mentioned earlier, most consumers are seeking out businesses that offer financing options because they don't have the cash or available credit to complete a sale. And this is a large category, right? So this is, and back in the old day, I'm old enough to remember the old day when people wanted something like a financing option, they'd get on the phone and they'd start calling up, hey, do you have financing? Do you have financing? Now people are just going online and searching for it. So if your business doesn't offer financing and somebody else does, you're not even going to get an opportunity as a business owner or as a business manager to make a pitch for the sale. You may have a better service or a better product. You may have a lower price. You may be better overall, but guess what? If somebody doesn't contact you because they feel that there's no way that they can make that sale happen, why are they going to call you? So it's not just enough to offer financing. The world has to know you offer financing, right? Otherwise, you're going to miss out on a large sector of the population. So I'm just gonna run through some of these, why customer financing is even more critical during a financial crisis. And this is not guesswork. We have, this year, and some of it is not due to the pandemic, some of it is just due to the work we've put in as a business, but Flexbuy is up 68% in new merchant enrollments year to date than it was, than the prior year. So, whether it's people searching us out more, or whether us just being out there and reaching more people, and with the help of you folks, we're getting more merchants that need financing. So maximize sales on people. So this is offering customer financing can impact every stage of the business cycle. So maximize sales on people that contact your business but won't buy using their existing payment options. So somebody contacts you, you have financing, that increases your potential for a sale. Increase the number of people who contact your business in the first place. So as I mentioned, 77% of consumers making a major purchase seek financing. So the first step is getting it out there. Increase your sale amount. So people that utilize financing spend on average 20% more. So it's gonna bring your tickets up. Bring back previous customers and increase referrals from existing and past customers. During troubled time, people seek advice from friends, right? So from friends and family. So, if somebody needs something and, they tell someone and you offer financing as a business, there's a good chance that you may get a referral because they need that financing. That's the only way possible that they're going to make that transaction. Okay, so here are the 3 ways a business can utilize customer financing. So the okay way, and we try to teach our merchants. So when you bring someone on to us as part of our sales approach, we're going to try to encourage them to utilize the financing, and we're going to try to get them to utilize it in the best way possible. So this is the okay way to use customer financing. Suggest financing to a customer when all else fails as a way of saving a lost sale. So you're salvaging lost revenue. That's okay. And I'm going to tell you that probably 80% of the businesses that we deal with, that's how they utilize customer financing, right? Because, in their mind, there's a cost to customer financing. It's more work. I'm going to have to put an application in. There's a chance that the customer is going to be declined, and I'm going to have to deal with having to let them know that there's a decline. So they're going to wait till the house is on fire before they offer customer financing. They're going to go through every every which way of making a sale before they get to that point. A better way is make a financing part of your pitch at point of sale. So and it eases the way to a sale. So if you're a business, you're out there and you say to someone, we have this, and this, and financing is available, and you could have it for as low as $150 per month, whatever. So that's a better way of doing it. So you still haven't reached anybody to pull them into your business, but at least at the time you're making that pitch, to a customer about your product, you're introducing financing. The best way, and this is the way the sharks do it. This is not the way most businesses do it. But the best way is make financing part of your marketing and sales strategy to drive people to your business and close the sale. So as I mentioned earlier, and there's statistics that prove it, people are searching out for financing. So will the okay way cover those people that are searching for financing? Will the better way reach those people that are searching for financing? Only the best way, only the way of making it prominent, making it where, you're marketing with it. You're putting it on your literature. You're putting it on your website. That's the only way that you're really going to maximize how maximize customer financing and grow grow your business. So, lead with customer financing. It could be on a truck. It can be on a website, financing available. I mean, at the very least, it's going to pique, someone's interest. If they fill out an application and they get turned down, guess what? At least that still becomes a lead for you, right? So if you're a business and, you have your financing link on your application, there's two ways to do it, right? So you could put a financing link on your application, build a form, have them click the financing link, have them first fill out a lead form and then go to the financing page. Or you can just put them directly to the financing application. Either way, if they get approved, now you have a hot lead. You have somebody that is capable of buying what you have to sell. If they don't get turned down, if they don't get approved, you still have someone you can reach out to, and you could explore other options. There may be other options. Maybe what you offer is so important to them that they're going to go out and find someone to lend it to them. Or maybe we're going to give you a payment plan option where you have the right type of product or service where you can offer a payment plan. Maybe there's a downsell, there's a less expensive option you can give. But either way, without the conversation, without that initial contact, whether it's online or whether it's by voice, if you don't have that initial contact, that initial entry point, you can never make a sale. So if somebody's searching out, in this case, let's say a fence, and they come to this, they know they need financing because they know a fence is going to cost them $5,000 approximately, and they know they don't have that money, and they don't see that you have financing available. Maybe they'll fill out this contact form and ask that question, or maybe they'll just keep on, maybe they'll click to Google and go to the next company and keep on doing that until they find someone that says they have financing available. So, how important is financing? So let's look at the extreme. The extreme is really, housing, but let's look at the car industry and what it's meant to, to the car industry is to have financing. So if financing, let's make believe we live in a world where auto financing doesn't exist, and you're trying to sell this automobile for $28,960. How many people have that in their bank to be able to make that purchase? How many people get scared by that number of $28,960? But let's say you advertise it, and now instead you're able to say $499 a month for 24 months for a lease, or $399 a month for 24 months, whatever the numbers are. That changes the whole paradigm, right? That changes the whole way you look at that purchase. No longer are you buying something and spending $28,960 a month. You're buying something and you're spending $399 a month. That's easier to chunk. That's easier to say, all right, that fits into my budget. I just turned in a car, whatever. I can make some adjustments to make that fit. But to come up with $28,960, the car industry wouldn't resemble anything that it does today. There wouldn't be a car industry probably without the financing. So the same thing works with consumer goods. So or services and products. You could do the same thing. No matter what it is you sell, whether if you're a pick it. If you have a business that's selling furniture or selling whatever, you could break it down and offer it as a monthly payment instead of a lump sum amount, because the lump sum amount is going to scare people. So if you're offering a service, let's say a coaching program or a vocational school, and it's costing $7,000, that's a heck of a lot of money. But if you could say, you know what, it's going to cost as low as X amount per month, and you're going to get the same thing, all of a sudden that changes everything. So, is it going to be the hook every time? Are you going to be successful every time if you use this as your selling approach? Probably not. I mean, there's going to be turn downs. We have a lot of turn downs. Every business every company in our industry has a lot of turn downs. We do our best to limit those, but you're still going to have turn downs. But you're having the conversation. You're getting people interested in something that they otherwise could probably never be interested in if they didn't have a financing option, or at least you didn't open them up to that possibility. So, we're all trying to, no matter what business you're in, it all comes down to acquisition costs, right? So how much do I have to spend to get a customer? At Flexbuy, we have that same question, all the time. How much does it cost for us to get a customer? Whether it's coming through someone like you, whether it's coming through an advertisement, whether it's coming through marketing efforts, there's a cost of acquisition, right? So, you know, the effort to bring someone to your door is going to be the same whether you sell them or not. The question is, can you bring more of them to your door so you can sell more? So, you may be, there's always a number as far as how many you're going to sell. So you may, no matter if you're in a business, you may sell 20% of the people you touch. So you're going to sell more if you touch 10, or you're going to sell more if you touch 20. So, the customer financing changes the paradigm of how people look at a purchase, but it gives you more opportunities, to sell as a business. So, that's what it all comes down to. It's not going to be everything, but it's very, very important. So what are we seeing now? So what markets are best situated today for customer financing? And where have we seen the most success? Service businesses are a very strong suit of ours. There's not a lot of good financing options for service businesses, for the intangibles. And there's a reason. Some lenders look at it and say, there's a lot of buyer's remorse when somebody's buying a service, and there's a lot of objectivity. The company can think they're delivering a great service, delivering, something that's of high value, and then the customer says, you know what, I didn't get the value. Maybe they didn't put the work in, maybe whatever the reason is, but there is risk involved. But we have a lending solution, a platform solution that we can handle service businesses, and it's probably our strongest category. So, think self-improvement, think any kind of problem solving, anything where your ideas or your information is the thing that you're selling, or your efforts are the things that you're selling, right? That's the way it's always been. Some people have the knowledge and they can do it themselves. Some people have the talent and they could do it themselves, but a lot of people don't have the time to do it themselves. So that's where they leverage their time to get somebody else with the talent and with the knowledge, to do it for them. Specialty retail. So, we're still getting our share of the furniture stores, the mattress stores, but, think in terms of other retail type of businesses, right? Power sports and hobbies, home use industrial equipment, fitness equipment, saunas and spas, specialty jewelry, security equipment, things that, maybe there's not a showroom. Maybe it's something where it's on the website and then you go out to someone's home and you sell it, or maybe they have a few a few samples that they can show you, whatever it may be, but it's not the typical, furniture store where you're walking around a showroom type of thing. Like I said, we'll get those and we do those gladly, but think in terms of specialty retail. Home improvement is a very, very large category for us as well. Think all kinds. Where we're strongest at, and there's some good solutions out there, and I'm going to talk in a moment about a new solution we're going to be launching next week that's really going to be dynamite for home improvement. But there's a lot of good solutions out there and there's some competition. But how many lenders and how many, people like us want the small home improvement company? And isn't that most of them? The one truck chucks out there, the home-based electricians, those type of businesses that are out there in droves because maybe, they were laid off back in 2008. They lost their job and they decided to, leverage their talent to go out on their own. And we're going to see a whole new wave, of that now. Now, think in terms of what has this pandemic meant to people, right? So a lot of people were stuck at home, and when they were stuck at home, they said to themselves, I wish I had this. I wish I had that. I wish I had an outdoor kitchen. I wish I had a hot tub. I wish I had a finished basement with, with the pool table. So these are the things that they had a lot of time to think about. And, maybe now when things normalize, they're going to say, let's go out and do it. So home improvement companies that specialize in these, you know, type of living spaces we'll probably see a spike in their business. Um, we see a lot of B2B, believe it or not. So a lot of small B2B businesses. It's not, when you think of B2B, you think of, one corporation buying from another corporation. But there's a lot of businesses out there that sell, equipment and tools to these small type businesses, right? And the small type business, nobody's going to lend to their corporation. They're going to have to sign personally anyway. So, we have a product where we can actually get them to, they could apply personally, they can get the money and utilize it for, whatever it is that they want to utilize it for. So small time B2B businesses are utilizing us, greatly. So it's a great opportunity. There's a lot more, and I just did this off the top of my head, and I did a little research. But think outside of the box. When you see a business, and I do this, I don't I don't discard my junk emails. If I get junk emails, I look at it, and I ask myself, is there an opportunity here? When I get those circulars in the mail, those ones you get of the local businesses, I go through that. I go through my Facebook sponsors because I say there could be opportunities here. Are these people selling something that costs from a few $100s on up that they can use financing, and maybe they haven't thought of it yet? So think outside the box. That in every area, this is not the most successful people in any area are the ones that really um, you know think outside the box. Maybe they find their lane, they find the things that they're good at, but one of the things I suggest is make that lane thinking outside of the box. So here's so what's important to businesses looking for customer financing, and these are some of the rebuttals you're going to get, and they're going to be worded differently, but it's going to be these are the things that that people are. I'm just going to shrink my screen a little bit because I think I may be missing an item here on the bottom. Oops, nope. Okay, there we go. Okay, so here are the things that are important to a business. They may, they may ask it, but whether they ask it or not, at some point it's going to be important to them. Can the business get accepted by the lender or program? As I mentioned, this is the most important thing, right? So, if you're a business looking for customer financing, where do you start? How do you know? I've been through most of the lender websites out there, the customer financing lender websites, and rarely do they give you what the qualifications are for whether you'll be approved or not. So usually the process is submit an application and we'll let you know whether you qualify for our customer financing program. So can the business get accepted or not? And nobody has time to waste their time. So this is a very important question. Now, we're not perfect at knowing that. We have programs that we know we can, deliver, but there's still questions. But I think we have a better idea than most, and that's really our main function. Is it easy to use for the business? How easy it is for them to implement it? Can the consumer apply from anywhere? And that's very important today more than ever. Who gets approved? What kind of credit criteria is there? What is the discount? What is the funding fee to the business, right? So, a lot of you in the credit card space, and in your world, people will, flip from you to somebody else, or flip from somebody else to you over 5 cents, transaction. So discounting it, the fee is certainly, important. Customer financing, there's ways of diffusing it a little bit, because it's more than just a utility. It's also, if used right, a marketing tool. And what is the actual cost of getting a sale that you wouldn't have otherwise gotten? It's really not a cost, it's really a net gain. What is the minimum and maximum funding amount? So you could find the right program, but will it cover your transaction? If a lender cuts off at 6,000 and your average transaction is 10,000, or 80% of your transactions are 10,000 or more, that $6,000 max is going to have limited importance to you. Is there a fallback program for applications that are declined? And I'll go more into that in a little bit. But if you're a business, and our role as consultants, and that's really what we are, as what besides what we bring to the table, is we want to give them every opportunity to make that sale, right? It really breaks your heart if you're a small business and every sale counts. It really breaks your heart if somebody really wants to buy from you and you just can't put it together. So is there a fallback position? Are the terms competitive to the consumer? This is one I struggle with, because so many times we have businesses that, I'm not going to sign up with you because I don't think that the terms of I don't think that my consumers are going to are going to like those terms. You know, if you're a business, let the consumer make that choice, right? So these companies, like in the furniture space, these lease to own companies, they've been very successful, and with consumers paying the equivalent of 100% or higher on the money that they're getting. So too many businesses overthink this question. Is it competitive? It's let the consumer decide, because what really matters is, does the monthly payment fit into their budget? Right? Think about the home you purchase, right? So if you purchase a home and you take out a $200,000 mortgage, how much are you going to pay over the 30 years if you keep it for 30 years? It's mind-boggling, right? It's going to be $600,000, $500,000. But it's still, the mortgage industry and the housing industry is still very healthy, because people don't think in those terms. They think of, what is this going to mean to me day in and day out? And is a soft credit check or hard credit check? And this is kind of important, especially when you do what we do, and have multi-lender programs. The last thing you want is to have an application go in and have 5 inquiries show up on your credit report. And it's important because people are doing other things in their lives. So that's an important question that the consumers will ask. And especially now, more and more consumers, because of things like Credit Karma and the like, are more savvy about their credit. So if their credit is good, they know it. If the credit is bad, they know it. And they're trying. Most people are trying their best to make it better. So Flexbuy checks off most of the boxes. Nothing is perfect, and we do our best to close the gap. But we check off most of the boxes. So we provide multiple multi-lender platforms and individual lenders, um, and can accept almost every business. So whether the business will get approved or not, every category that we want to. So there's very few categories. We don't get into firearms. It's just too controversial. We don't get into puppy mills, too personal for me, and any business that harms animals in any way. So it's just a quirk of mine. But other than that, we will handle most businesses. At least we can offer them a solution. Um, we provide full training and support. So, when it comes to implementation and usability on the part of a merchant, it's all going to be subjective. I mean, there's a lot of people, 50 and over, let's say, maybe even 40 and over, who really don't have any technical savvy whatsoever. So anything you implement that's going to involve technology is going to be complicated to them. Now, we're totally paperless here. So, if a merchant says, I don't have an email address and I don't use computers, there's probably not a financing program out there for them. Especially through us, we're totally paperless. Everything is done online. Everything is done in the cloud. You have to be able to upload. You have to be able to do the basic things. So, we do our best to train people. We'll support them. We'll hold their hand. We'll do the best we can. But keep in mind, I mean, people that are somebody that's an auto repairman, they have an auto repair shop. They're good at what they do. They know cars inside and out. They're not finance people. So you're trying to tell that small business owner to take, his auto repair hat off and put the, finance hat on. It's a difficult thing. So we do our best, and some are successful. And, the main reason that merchants don't succeed with us isn't because our program fails them, is because they don't use it, either out of fear, out of apprehension. They don't want to experiment. They're in the middle of it, and don't want to look don't want to look foolish for whatever reason. So those are the kind of things we have to help avoid, is getting the business comfortable using it. As I mentioned, all Flexbuy programs have loan applications that are web-based, so they can be done anywhere, from home, from a phone, from a tablet. No matter where, somebody can fill out an application. So no program is going to approve everyone, right? So what we try to do is we try to fill our platforms with lenders that go as deep as possible. So you know that that means something different today than it meant 3 months ago. 3 months ago, we were funding and approving routinely people deep into the 500s as far as credit score with our core platform. I don't think, even though we're not privy to the credit scores, I don't think that's happening right this moment. I think the lenders have really pulled back. But we do whatever it is. Our most subprime lender is still going to be the most subprime lender, right? So the whole world has changed as far as that goes. But we do have platforms that have the no credit, lease to own products for goods. And our platform will definitely go down as deep as it possibly can. It's not gonna be perfect. But I'll talk about it in a second. Our Easy Pay Plan Plus program that has closed the gap for some. Um, the discounts, the cost of the business, as I said, will vary. Most of our programs are under 5%. A couple of them aren't. We do the best to keep our costs down. I've never been one to feel comfortable charging 20, 30% discounts, and there are lenders out there that do it. And the reason they do it is they take on a greater risk. And I've done it in the past as well for businesses that have the profit margin where they're able to absorb those kind of discounts. But most of our discounts are on the lower side. And as I mentioned before, discounts should be easy enough to sell against, because customer financing is not something. You may want to put it in the category of credit cards, where there's a cost to it. But customer financing, if used properly, is a hook. It's going to take that person that otherwise would never be a customer, and turn them into revenue for you. So, it's a different category, and it's easy to sell against, but there are some businesses that are notoriously have very thin profit margins. So, it's a real thing, and discounts are a real thing. From a dollar amount standpoint, we can accommodate most businesses. Our main platform goes from $1,000 to $50,000. Even though one lender technically goes up to 100,000, I haven't seen it yet, but technically they go up to 100,000, but we don't market it that way. But we can accommodate most dollar amounts. Our Easy Pay Plan Plus program, and I suggest that you get more versed on it. We have information in agent resources and in our program guide on it. Is an in-house payment plan solution that allows the business to approve everyone. So it's a monthly payment plan when that business is set up. But get this, for service businesses or even businesses that where there's a portion of what you sell is a service, it will be guaranteed even in the event of a default. So if you set someone up on a monthly payment and you release, and you do your service, even if for some reason 6 months down the road they stop making their payments, their monthly payments, you'll still get paid as a business. So it's on the service portion. You could still set it up if it's on a product, it's just not going to be guaranteed. But think in terms of this. So even like auto repair, for instance, auto repair, you have the cost of the parts and then you have the cost of the service. So if you're the auto repair shop and you want to use the Easy Pay Plus program, you can structure it in a way where, maybe you take a deposit for the cost of the parts, and then you use the Easy Pay Plan Plus program. So I may have to change the name. I'm having trouble saying it. The Easy Pay Plan Plus program to finance in-house the service portion of that bill. It's just something to think about. It also can be used as a hybrid. So if you're a business and you if you got financing for someone, but maybe it fell short, you can use the payment plan on the balance. So if you got a high profit margin business, this can be a bonanza for you, right? So there are some businesses that see a tremendous cash flow, and I won't go over it today, but we had in our agent resources, there's a case study of a business that signed up with us and used the Easy Pay Plan Plus program and realized $141,000 of new revenue in their first 30 days using it. Using this program, and we have them on 3 different finance programs. So these aren't people that got turned down by everybody, and they put them on this program, and they realized a lot more revenue out of it. And like I said, this is 100% approval if the business wants to do it. As I mentioned, the terms as far as our programs go, it will vary. Each lender, we have on our core Credit Select Plus program, the lenders go from single digits, 5.99, up to 32%, and it will vary according to credit and financial standings. Other platforms, we have programs that are not as friendly as that. The cost may be higher. As I mentioned earlier, and I'm going to say this all the time, this all comes down to monthly payment. It doesn't come down to the interest rate unless you allow it to be part of the interest rate. To become the interest rate. So when you're selling this as a sales partner, the focus should be, this is going to get you a sale that you otherwise wouldn't have gotten, and you're taking a lump sum and you're turning it into a monthly payment. So the interest rate is the interest rate, but at the end of the day, it's going to be about, can the consumer imagine and accept that monthly payment into their budget. If they're able to do that, they'll go along with it, and it won't matter what the interest rate is. Okay, so I'm just going to go. That's the presentation, but I'm going to go a little bit further today. I got a few more minutes. I want to go into pause the share. I want to go into, for new people, I'm just going to walk you through some of the tools we have, and even if you've been around a while, this will be. Let me see. Okay, so if you recently joined us, or maybe you haven't done this in a while, we have an agent resources. So if you should have gotten login information. If you lost your login information, you can't find it, you can email Dan Wolf in our office, danw@flexbuy.com, and he could help you log in to your agent resources. The thing that we've tried to do here is we've tried to make it as easy for you to sell this as humanly possible. So, we have all kinds of sales partners. We have sales partners that, oops, wait a second. Is my sales? Oh, okay, here we go. I think, hopefully you guys can see this. Yep. Okay. Sorry, guys. You weren't able to see this. I had it paused. Um, so this is the agent resources look. So, we have all kinds of sales partners. We have sales partners that say, I need to understand every single aspect of your business before I feel comfortable selling. We have other sales partners, and most of them um, will say, I just want to sell this thing. How do I get out there and sell this thing? As I'm excited about it now, how do I go out there and sell this thing as quickly as possible? We have some people that fall in between, right? They want to sell this thing as quickly as possible, but they want to also learn it over time. So we give you this agent resources where you have everything that you need. You got some important stuff like the program guide, which I'm going to show you in a second, and some of the other tools that we offer, calculators, all kinds of stuff, forms, all kinds of information here. And I do recommend that some training videos, and this training video will be back there, I'm sure. But all kinds of tools available to you. You can ignore it. You can utilize it. You can reference it when you want to, but it's here for you. But I suggest you just go through it and just become knowledgeable of what is back here, so you can just know it's there for you should you need it. Now, the one thing that you should reference often, and it's in the agent resources, and when you need it, go to the agent resources and get the most recent one because it changes frequently, is our program guide. So our program guide describes all the programs that we currently are offering actively. Now, we have other programs that are not on the program guide that we can offer on a specialized basis, but we've taken them off because there's redundancy with other programs, or that they're very nichey. So, but we have them available. But the main programs are here. So we have the Credit Select Plus. We have a direct to merchant credit-based platform, which I think is not going to be around much longer. The results just haven't been great with it. So I'm monitoring it to see if it's worth it for our merchants. The Flex financing, which is out, and I'm not going to go through this now, guys. I suggest you pull the program guide out and look at it. It's not that complicated. The Flex financing, a multi-lender platform for retail. And we have a few lenders in there. We have an a la carte no credit check lease to own program, our Easy Pay Plan program, and the Easy Pay Plan Plus program. Now we have two, so they're slightly different. Slightly different on cost, slightly different on the way the merchant gets paid. We're promoting mostly the Easy Pay Plan Plus program because the secured factor is really a game changer. It will go from anywhere from $300 to $20,000, and even higher, really, upon approval. But it allows a merchant, especially somebody who's selling a service, to be able to really take everybody in. Especially if it's guaranteed. So it's really a great program, and it's great as a fallback. So if you're a merchant, you say, I really want to maximize. I really want to maximize my sale. I'm going to try my best to get them to pay one way or another through their own resources or through the financing that you offer. But if they get turned down, I want to be able to say that everybody's approved. So think about this: financing available, 100% approval. You market that in the right way, you're gonna drive business to your website, make your phone ring, whatever you want to do, you're going to make it happen with this Easy Pay Plan Plus program. So it's really a tremendous program. I suggest that that you become familiar with it, at least to the standpoint of selling it. You don't have to be an expert on it, but it's pretty formative. It's pretty informative. There's a lot of information in the agent resources on it, so you should get a good feel for it once you look at it. And then let me see. Hold on. Okay. I'm going to show you this one tool, and this is like a really important tool. And this is something we created that has allowed our sales partners to, get started almost immediately. It's our proposal creator tool. It's an online form that, if you started this, let's say this morning is your first time being introduced to Flexbuy. In 10 minutes, you can use this tool and you could start selling it, and delivering customized proposals to your prospects, and sound really, really smart doing it. So it's an easy form that you fill out online. Everybody can utilize it. You put in basic information. You put in the kind of business that your prospect is in. Let's say it's home improvement in this case. You can write a description of what it is that they are selling. It gives a little spiel about FlexBuy. It gives a little spiel about customer financing. It gives you the programs that they're either eligible for or may be eligible for, that we're going to suggest. It spells it out, gives you some more information, cost, and you click submit, and this will create a proposal. Now there's a checkbox here: deliver directly to the business. So let's say you want to do this really quick. You want to do this, you leave this checked, you click submit. It will automatically generate a proposal that is emailed to you and emailed directly to your prospect, with with an email that we created. If you want to unclick this box, deliver directly to the business, you click submit, and it will deliver the proposal directly to you. And then you can send your own email. You can print it out and hand it to them. But it's really a great tool. I think most of our sales partners are utilizing it. I know all our people in-house are utilizing it, and I think this is the number one reason why our sales, not just this year, but leading up to this year, have really increased substantially. I think this helps the sales process in general. So I encourage you to play around with it, put in fake information, just make sure that you're having it just delivered directly to you, in case you put in a business's name in there. So play around with it, see what it looks like, see what the programs are. Let's say, what happens if I'm going to market to medical businesses, or what happens if I'm going to market to furniture stores. It will give you the information that you need. And I'm going to cover one more thing, and I promised, I told you that there's a new product coming out next week. Hopefully, my fingers crossed, next week we're going to have a new multi-lender platform coming out next week. That's starting out is going to be for home improvement, and it's really going to be a great platform. It's going to be a credit-based platform, online, direct to merchant financing, and the merchant approval criteria is pretty easy. So I'm putting together the details, still cost and everything, but it's going to be extremely, extremely competitive. Going to be very low cost as far as discounts are concerned to the merchants. We're going to scrutinize it a little bit more than we do on the Credit Select Plus program. So it's still going to be a background check done on the business owner and the business, no credit report done on the business owner. But as long as they come up clean, that there's no history of fraud or whatever it is, they should be able to get approved very easily. And we're going to open this up, hopefully, like I said, starting next week, and I'll send an email about it. But it's going to be initially for home improvement, but hopefully down the road, it's going to open up to most categories. So it's going to make a great 1-2 punch with our Credit Select Plus program, because our Credit Select Plus program will always cover categories that will never be handled by a direct-to-merchant platform. But this is going to be an exceptional platform. The technology is all done. It's all in place. There's a back office that's already created. I'm excited about it. And like I said, I'll be sending out emails on it later. I'm going to answer a few questions. Let me just